in a large home, somebody's of retirement age and they want to downsize or they want to move into their retirement home, for example. Let's play that scenario out a little bit. How would that work? So for example, they want to, they have a house now, they're going to sell it. They want to buy something that they're going to, retire for the long term. Maybe they go into a retirement community or 55 and older, or they just want to downsize into a single family, whatever. So the process would be, so let's just kind of talk about that process. So the process would be they would sell their house, right? And then if they were to purchase their home with the reverse mortgage, how does that work?
So let's even back up a little bit more. So let's say they reach out to you and said, hey, you know what, we want to downsize. We got a 2-story, we're empty nesters now, and we want to move to Lincoln Hills. So you're going to list the house. And then they say, you know what, we want to do a reverse mortgage purchase on the flip side of that. So while they have the house listed, we're getting them qualified for the reverse mortgage purchase based on them selling the house and whether they have the equity in the current residence to make the down payment between their cash, their assets, and the equity that they, or let's say the revenue that they get from the sale of their property. They're going to use that to make the reverse mortgage purchase. So it's whether the personal cash, proceeds from the sale, whatever it is, they're going to have to use money to make a purchase. Now, in the qualifying, they're going to take their age of the youngest borrower. So let's say you have husband and wife. Husband 65, wife is 70. I'm just flipping that around. Okay. So husband 65. They're going to base the qualifying based on his age because it's always the youngest person in the couple. Okay. If it's a married couple, it's the youngest person they base it because it's all based on life insurance tables, right? Life expectancy. So they're going to take, in this case, his age at 65. They're going to take the expected rate. The expected rate is the average over the last 2 years of the rate that's going to be applied to the loan. It's an average, okay? Not the actual, but the average. And that's what they use to actually calculate how much they're going to have to come to the table with. So they take his age, the expected rate, and the purchase price, and that's going to drive a number. Now, I can do an example if you'd like. I can share with you what that looks like.
So let's hold that thought. We have a question. Can you make payments towards your mortgage if you want?
Yeah, you can. Absolutely. Yep. You can make so let's say, for example, it's $100,000 principal balance that you started with. If you said, hey, for legacy, because I want the kids to have more, I could make a $6,000 per year payment because that would be the 6% interest, or the total of 6% times 100,000 would be $6,000 that you'd be going negative every year. So you could actually pay that if you want. You could pay it off completely if you wanted to.
Okay.
Yeah.
So let's go back
to the app here real quick.
Okay, so let's go back to the numbers again. Let's say that I'm selling my house for $1 million.
Okay.
So then based on what you're saying, you're going to come up with a calculation based on the age, like all of these different factors, right? But if we want to put down more equity, can we do that? Oh,
sure. Yeah, you could always
make that choice. Okay.
You could always come in with more money. Absolutely. No one's ever going to say no to that. Okay, so let's see here. Okay, going to my app and now it's frozen. Oh, wait, hold on. Oh, come on. Getting that's really strange. Oh, here we go. Okay. All right, so let's say the home they're going to buy, right? Let's say the estimated value. What's the estimated value of a home in Lincoln Hills? About 550, 600,000.
Let's just say 600,000.
Okay, so 600,000. Okay, and what I said was 62 was the youngest borrower. I'm 65, excuse me. And let's say the expected rate is 6%. Okay, so they would have to come in with 391,000 roughly. These are rough numbers, by the way.
Sure.
$391,200 as the down payment, and again, they would be mortgage free for the rest of their lives on that purchase.
Okay.
So in this case, about 50%.
Yeah, about 50%. So